Welcome everyone. How we doing? This thing's open. Viral. How are you? Dang, holding the swing on some Dow Jones, huh? Love it. Insanity on those things, huh? Yeah. Dow just on the ripper, huh? 9th of July. See, we're popping in summer back here. Love that. Catch the whole explosion. Once that little area was cleared, man, that thing was off to the races, huh? Nice, congrats on that. That's a good swing, 638%. I sure hope you taking a trim or two on those. Them diamond traders are in euphoria mode right now. It's wild. They don't get that. The people who trade the diamonds don't get that kind of feeling. It is hilarious. Somebody in here. God, I hope he's in here tonight because he brought this up. Talking about not many people trade the Dow. Who was that? He even messaged me after. Like that guy. But he said not many people trade the Dow, and we were talking about it in like my classes last week. And then we both said, I mean, and this is YM for anybody who doesn't know, this is Dow Jones, the futures on it. And so God, who was that? I wish I could remember right now. But we were talking about the Dow, and I was like, yeah, not a ton of people trade the Dow. It tends to be a slow mover, but on the futures, it's one where point wise, you can just get absolutely disgustingly large moves. And for anybody who doesn't know, futures pay you by the point and tick technically, but all a point means is a dollar. And so you make a certain amount of money for each dollar that a future contract or the future price moves. And we were talking Dow here, and we are now sitting a solid 2,000 points above where we were talking about the Dow in a week and a half's time. That's just an insane move. Good for those Dow traders. And you guys know me. I mean, I like those cheaper, slower movers. I preach them all the time. So does 1K, trade some of those slower movers. And right now we are seeing those really fun times where the slower movers just decide to put in not slow, absolutely massive moves. It always makes it real fun. We'll see. End of the month, I figure we'll get to see if this trade sticks or not. I sure would like a little bit of retrace to get in there myself. I was out of town, so even this IWM trade that I've been watching for 3 years, I didn't even get to catch it myself. I've just been watching this thing consolidate. I've hit a bunch of scalps at that 200, caught some nice moves on it, but I never caught a 10% 2 week move on small caps. Welcome everybody. How we doing? Hope everybody had a good day today. Yeah, this one was pretty this one was wild today, I mean, what gotta be the only, one of those few popular tech chip names that somehow ended itself green on the day. I mean, a lot less green than it was, but yeah, very tradable on Intel today. I saw that. I don't know what was up on that strength and weakness all of a sudden. Ugly daily candle in the long run. Right back into that zone though. You hit it short or did you hit it long? I mean, I'm sure this long trade off the open was an absolute printer on that. Nice, good for you. And then nice shorts here, if you're into that. You guys know I really just hate trading short. So I normally just looks for dips to buy. And if you look outside of about 10 names in the market, there has been many dips to buy. But if you're a tech dip buyer, you're kind of having or a big tech dip buyer, I should say, you're having a bit of a rough go right now. CVS, huh? I never look at this thing. Hmm. Well, I don't love the entry long at the top. Needs to get above that for sure. Working through that nice gap. I mean, it does, obviously you're in the right sector. Could end up getting this gap fill on it up there to that 67. But I just get pretty, me personally, I get pretty leery when I start to see some like, any sort of double or triple top forming. You know, that thing basically, if we go in there on the day, it basically rejected just about exactly where you would expect it to, bought itself back up. But going forward, that could be a sweet one. That could be a sweet one. And as soon as it clears that 62.10, you know, then you got some running to do. 64, because you know gaps fill quickly, but when you have a lot of data back here, it's always important to take note of any of this data further back just to see, you know, where might there be a holdup. And really it looks like just about that 64, 65. So you got some nice upside to there before ideally filling that whole gap. Don't hate it, just not quite the entry I would have taken. Nice one. Ooh, Lambos, he got clapped today. People long on tech, tell you that much. That open was like a pretty ornery one too. And we're going to talk about trading today. You know, had this nice sell, and then you saw those buyers, and I personally right here was kind of thinking, hey, we might see a little bit of a bounce. Thankfully, did not take a trade, you know, got lucky. That's, you know, I just got lucky. But I was watching this little zone right here thinking like, if we hold this, this is where we're going to bounce. I didn't expect a huge bounce, you know, maybe at least test that 490. But ultimately clobbered, you know. But I know that I came into the day looking at tech being like, okay, you're down like $6, $7 in the after hours. Well, maybe you might want to take a bounce, you know, and it in fact did not want to take a bounce. Welcome everybody. See a few more people coming in. We're gonna give it just a little couple more minutes and see if we get a couple more people in here. But happy to have you. Dirty River, gonna be talking a trade plan today. I'll wait to really start talking. I gotta do one thing real quick. Nice, Johnny. Happy to have you. I'm excited for this class too. I think it should be a good one. Al Brooks in the house. Love to see it. Yellow stair step lines, we will for sure be talking about those tonight, but just to get to them, or just to tell you what they are, they're the hourly 20 EMA, but this is the hourly 20 displayed on the 5 minute. So when like the reason that it's flat like this is an hour. This length right here is an hour. So when the new, you know, hourly EMA updates, that's where you get your update. And then you have another hour of it building data, and this is where it updates. And so that's why it looks so stair-steppy. Obviously, if you zoom out to the longer time frame, the hour, now it becomes smooth. But I use it basically every single day in my trading. And then I spend a lot of time on the 5 minute and the 15 minutes. So I like to be able to, this was actually a script Toasty found. I like to have it on my 5 minute chart. And with that script, you know, if you're, I don't know if he's in here tonight, but 1K, he's been loving that daily 9 EMA, which is not something that I personally use, but he has it set up because you can set it to whatever you want. He's got it set up to show him his daily 9 EMA on his, you know, shorter 5-15 or hourly charts that he likes to look at. And so it's great. Just for me, that hourly 20, I mean, we jokingly have a lot of good names for it, but they're all good names. But most of us just think of it as a bit of a cheat code. You know, it makes it very like it will provide you a trade almost every day with a very high success rate. So a bunch of us use it. A bunch of people have hopped on board with it. Makes me really happy. I think of all the things that I teach, the two things that people care the most about are absolutely the opening range and the hourly 20. They're just two, and we'll be talking them today, two very simple things to use that just provide you trade after trade every single day. So I love them. But with that, welcome everybody. Happy to have you, Dirty River. We're gonna get rolling here tonight for anybody who doesn't know, we've been working on just a series. That's what I'm calling it. I don't know what to call it. A group of videos so that I can explain basically everything, how I trade, the things that I look for throughout the day. And so we've done, I mean, 7 or 8 classes. I think we started support and resistance, obviously, EMAs, long time frames or charting long time frames, probably trading in ranges, trading in trends, opening range, price action. I think we chucked a trading psychology in there somewhere. We probably did a trend, a charting one in there somewhere as well. And then today we are building a trade plan. So, and if you've missed some of the other classes, no big deal. That's kind of why I did this. They're all recorded. And then after this, I will have it all, I'll make a post about it and get it pinned in my tab. So we'll have them all in order, that the order that I would want people to watch them. And then if you ever have a question, like for example, what's that yellow stair steppy line? You can pull up the EMA SMA lecture and you can see me talk about how I use that in my trading. So the idea of this was to get, basically everything that I do every day, post about in my tab, post about on Tradefloor, talk about in voice chat, whatever it is, get it all in a very easy to access place that you can just click on. And then, I'm sure that I'm obviously going to do repeats on some of these lectures down the line. It's always good to, have refreshers, but it will just be nice to have like a fresh, condensed, my ideas of trading sort of thing. Hopefully people will like it. We'll see. And so tonight is building a trade plan, final part of the series. We actually did have such, when I did the price action one here a couple of weeks ago, whenever it was, people really, really liked that. Kind of surprised me. But so we are going to do another price action one next week. It won't be, or no, tomorrow. Sorry, we're going to do another price action one tomorrow. And it's just going to be a little bit more in depth, some more of those things that I look for. You might notice, and I brought it up today when I was talking in voice chat, volume, gigantic. Volume to me it's the most important thing in the market. Without volume, the market doesn't go anywhere. There's, people out there that try to trade without volume. I know a lot of the ICT people try to not use volume, and, without volume, the market doesn't move. And volume is the surefire way to see what big money is doing. So, the volume that we see every day, building down here on these bars, this isn't retail. This is big money. This is algos. And so if you pay attention to volume and watch what volume is doing, it's the most non-lagging, because all indicators are lagging, non-lagging direct way to say, what is big money doing? Let's just say I took this trade, and we're going to get into building trade plans just after this. There's a point to the volume talk. Let's say I took this trade and I know I need to stop out. Well, if I'm not stopping out below here and I'm holding these, just to kind of see if we hold these lows, well, what's going to be the thing that tells me to stop out? When I start seeing a candle form like this on higher than average volume, I'm taking my stop in the middle of this candle somewhere, because the market is telling me people with more money and probably more brains than myself are clicking the sell button. So I should click the sell button too if I'm long. I need to get out of that trade. And volume is right there in your face, happening live. There's no missing it. So you need volume. But you might ask yourself, well, why haven't I done a lecture on volume? I will eventually, but where I was going to do my volume lecture, Toasty is starting his, big in-depth volume lecture. And I will, Toasty's good friend of mine, good trader. I will absolutely encourage people, if they want to learn about volume, to go watch Toasty's lectures on it, because, I can only tell you so much in an hour about how I use it. And there's so many nuances to it that I knew what Toasty was going to do for, 5 classes was going to be much better than what I could do in 1 class. So while you may not see it in my list of lectures, rest assured volume is absolutely crucial, should be used in everybody's trading every single day. And so we're going to talk a little bit about it today, but I'm not going to go into detail. If you have questions, of course, ask them and I'll try to answer them, but I'm not going to go into a bunch of detail. But as we're talking about building these trade plans, volume will obviously be a factor that we discuss. But I was thinking about how to do this, and I can tell you, trading is so hard because you want to have set rules and set parameters to tell you, do I want to take this trade? They can be very simple rules. They can be things like, I won't buy puts at the bottom of big red candles because we'll likely get a little bounce. Or this one's even a better example. Why buy puts here when there's a very good chance the market will bounce and you can buy puts here, So maybe that's one of your simple rules. Or maybe, you only buy puts when we're trending below the 9 EMA. Or maybe you only buy calls when we're trending above the 9 EMA. Those can all be rules, but I don't, I scalp. And so there's I mostly scalp. I swing trade a lot as well, but I mostly scalp. So I have many different rule sets that tell me, why might I take this trade? What am I looking for? Where's my stop out? All of those things. So for me to give a building a trade plan lecture is hard because I have different sets of rules for the different sets of trading. So I was kind of, thinking to myself, what would be the best way to do this? And I want to just do it where it is technically going to be a little bit of hindsight trading. And I'm gonna put this is more of a question. If this sounds good to you, otherwise, of course, I've done these lectures before. I got great bullet point lecture on building a trade plan. But what I was thinking we could do tonight, so that we can really apply it to the markets, and we'll be able to analyze price action while we're doing it. What I'm kind of thinking is, I was unable to trade. I was out of town for, some of these days. We'll probably do SPY instead. I was out of town starting on this day. This is the day I left town. And then the first day I got a trade was I traded a little bit on, I think, Tuesday. I don't think I traded anything Monday. So I got a trade Tuesday and Wednesday this week. So I missed these days of trading. They're all-time high trading, so they can be a little bit tricky. So what I was thinking we would do for building this trade plan tonight is we're just going to go back in time. We're going to start with our long time frame analysis. We're going to pretend these days ahead haven't happened. We're going to do some charting. We're going to look at some 4-hour charts. And then basically what I'm going to do is we're going to go back a few days to the day we sold off. And what I'm thinking is, on the charts, we'll basically just start here and we will watch the market develop, and we'll discuss how we would trade this just throughout the day, potential entries that we see. And this, to me, and I know it is hindsight trading, and I always put this disclaimer out there, if the only trading you ever see from somebody is hindsight trading, don't always listen to them. Thankfully I got a tab where I can talk to you guys in real time, things like that. But hindsight trading, you get to pretend you're better than you are. But at least if we do it this way and we track it this way, we can discuss where our entries would have been. We can talk about why it's important to be patient and wait for entries. And we'll be able to kind of analyze the charts and do it that way. And so we'll be able to, it'll basically be like, we're going to go through a whole day in whatever, 10 minutes, and talk about where we would take our entries, where we would place our stop outs, why we're entering, where we're entering, all of those things. So if that sounds good to everybody else, we will get to rolling. Let's see if I missed any questions. Yeah, fitness and futures. Now, I know that's about the hourly 20. That thing is just ridiculous. Scripts in my tab and in Toasty's tab. Yeah, I don't know what Donald did to the chip market, whatever. I think the big money people clicking the sell button probably did it, but that's just me. Yeah, you like that, Johnny? You're the only person who answered, so way to go. We're going with your work. So we will do as I always do. We'll just start a fresh new drawing set, and then we're going to start talking about trading. As I said, for the time being right here, we are basically going to pretend that these days haven't happened yet, the last 4 days. And we're going to start with kind of these big 2 days where we, took that breakout, set new all-time highs, etc. So we're going to look at the charts here and we're going to say to ourselves, what kind of information can we glean from this being on the daily chart? And so we're just going to talk about everything that I look at on daily charts, weekly charts, all of that, and say, how could we have traded on these days? And so, man, the market is just vertical, huh? So first thing that I'm going to do is I want to establish any sort of trends that we have going on. Obviously, a wildly strong uptrend, no missing that. And then we have a topside trend here, which, is places where you start to look for rejections. Obviously, sometimes you just ride that trend up, maybe take a small pullback and keep on running. So maybe that's what's going on here. But you always want to take notes of these important trends. You also want to take note of where any major SMAs are. So we're going to slap this SMA on here. I guess it's for today. Technically, what doesn't really matter for us yet. But we always want to know where the major SMAs are. And then we just want to zoom into the chart and look, where have we been trading lately? What kind of data do we care about? Obviously, we want to think about big breakout levels where we kind of consolidate and then finally take pushes up. Any sort of tops that we've set below us, obviously always identifying support and resistance on a chart. The market frequently trends, so we want to be able to play between those levels. Flip says it all the time, trade level to level. That's what all good traders do. Once you quit buying calls of resistance and puts at support and you just trade level to level, your trading life will become so much easier. So we've established our major trends. We've established some supports here. Well, we don't really have, and this is why I wanted to do these days, we don't really have a lot of data right here. We zoom in, we look at the charts, we had basically 2 really flat days. So for me personally, I'm just showing you what I would do. I would be interested in these basically flat days. This was a previous high. This was where we consolidated. And then if we zoom out a little bit, we can see, ultimately breaking this high is what gave us that really nice breakout. So we have interest in that. As I said, pretend these days have not happened yet. Well, now we only have these 2 big days. So very obviously, we want to mark both of those tops because that's the only information we have so far. Now we can't get anything else from the daily chart. We have 2 days of data right here, and we need to see what happened during these days, what happened in the pre-market, what happened in the after hours, so that we're able to trade around those levels. So we zoom in. 4 hours is always going to be, at least for me, my next step. And so, like I said, if we just remind everybody, big green day, big red day. So that's all we got to work with so far. So I'm zooming into my 4 hour here. We've kind of marked our tops, but we actually missed this top. And why did we miss that? That's because we were in the daily chart, which isn't showing you that after hours movement. We very obviously want that on the chart. Happens to coincide very, very nicely with our trend, where we ultimately rejected. The only other things that I really care about on this 4 hour chart are right here. On the day that we pushed on that Wednesday, we got a nice push up. And then the next 4 hour candle, I mean, we don't want to zoom in too much, but the next 4 hour candle pulled back 30 cents and it never looked back. So we're very, very interested in that as a breakout level. Next thing that we're going to do, let's see, well, let's give me enough days. Go to these shorter time frames. Again, we're going to come back here, 10th and 11th. These are our days here that we have to work with. And so that's our high. We missed it by a little bit. We want to look at these days and say, again, this is those 4 hour candles that we saw push up. There's our 30-cent pullback, never looked back again. That's some of the only info we have on that day that, to me, I really care about. Well, then we get to go to the next day and we get to see again, straight sell down to, and we don't see it as well on the 5 minute. We saw this on the 4 hour, straight sell down to where we wanted it on the 4 hour, and then basically instantly provided us a $1 bounce. So nice trade to be had here. And then bit more selling. And what I personally look for on days like these, we're trading at all-time high, so we need to identify levels. The things that I care about, lows. I'm always interested in low of day, and then I'm always interested in high of day. We slightly missed this one, close enough for me. And then again, slightly missed this one, close enough for me. So this is the data, that's really all we got in this area so far. And so, this is Thursday of last week. I think this is Thursday of last week. What I'm going to do is I'm going to turn on my indicators, the ones that, I personally like to use. For anybody who doesn't know, you can always go check out my indicator lecture on them. But we'll go through them real quick. Blue line, I'm going to take one of these off because it's just going to be in the way. Light blue line, obviously 9 EMA, most everybody uses it. Orange line, 20 EMA, most everybody uses it. Yellow line, 50 EMA, most everybody uses it. Purple line is VWAP, for anybody who doesn't know, volume weighted average price. So, this is a generalization, but if we are under VWAP, that means bears are making money and bulls are losing money. If we are above VWAP, that means bears are losing money, bulls are making money. Based on the volume, that's what it's telling us, is based on volume, who's losing money and who's making money. And so we can use all of those things to our advantage. And then final indicator that I use, obviously that hourly 20, it's one that I love. I always tell people a really powerful tool is if you have, if you are trading below both the hourly 20 and VWAP, you should likely be looking to short bounces. Worked very well on this day. I bet if we go back to the previous day, if you are above the hourly 20 in VWAP, like we are here, you should be looking to buy those dips on the way up. Obviously, don't just buy every pullback. You want some more information, but that's just a really powerful combo right there. So quick, that's the quick spiel on the indicators. And then, so here we go. We have our levels. We know what we're able to trade around. So now this is where I start going into the next day. I watch what kind of movement we have. Obviously, this is the after hours. And I start to say to myself, what kind of information do I have? And we're going into, unfortunately, this is really going to be slammed on this side of the screen all night, but we'll be going quick. What sort of information do I have? And so this is what I do. We're going into open. I'm watching this hourly 20. I'm watching all of these indicators. Looks like we had some sort of data on this morning. That might have been CPI day or something. I'm watching all these indicators. I'm watching the hourly 20 and I'm watching my price level. So I'm saying to myself, buyers are so far winning. We're holding our price level. We're holding VWAP. We're holding all of our EMAs. So market hasn't even opened yet, as far as we know. And my mind personally is saying, this is my line in the sand, 557.12. We break that, we're likely visiting some of these after hours lows and then likely visiting maybe this wick or maybe some of these lows on a nice sell-off. However, we hold it, we hold the EMAs. I want to see a break of the hourly 20 to get long with stops below it. So we go into the day and one of our two trade plans instantly works out. We get a pop over it, we don't get anything. We get a nice push here with a close above it. So this is where price action and understanding charts comes into play. We talk about it all the time. We knew we're in buy mode. We want to be long if we're above the hourly 20. Well, the hourly 20 is our entry. So we don't want to buy calls right here at 558. Yes, we got our close over our level. Yes, we got all of that. We want to buy calls on the dip down to here. And why do we want to do that? Because if the trade goes our way and we get the bounce where everybody else is breaking even that was chasing the long trade, we've already got a 40-cent move up on SPY. So we can be trimming when the people who chased are just breaking even. And where do we set our stops? Anywhere down here below these EMAs. If we're really knifing through all of the EMAs and VWAP, you can run a hard stop down here, 20 cents, whatever below you. Or if we just get a stronger close below some of those, then you stop out. No big deal. Very, very little risk on the trade. The people who are up here, fine, they get stopped out for a much bigger loss. So that's why you always want to wait for pullbacks or, bounces, whatever way you're trading. So next candle, obviously, phase is pretty dang awesome. Market just continues. Wow, okay. I probably should have planned this better than this. I didn't think about this just being a face ripper of a day. But for me, in all honesty, when I catch a move like this for how I trade, I always try to teach people how to manage their positions. So for how I trade, I look for a breakout and then I look for more breakout. At this point, I've moved my stop above entry. Obviously we're above all EMAs, we're above VWAP, we're above hourly 20. I've moved my stop above entry. What I'm going to do is when we get this breakout, we get another little consolidation candle, no reason to like think about breaking out. Then we get another nice push up. I move my stop to right here. I move it to that previous breakout. The issue is on this type of volatility, there is at least a decent chance this is going to stop you out if the IV is coming against you on this pullback right here. I would realistically, when I saw the push up to this level, I would be, and a pullback, I would be exiting the trade here. I know people like to love and hold these runners. That's just not me. I'm going to be honest with you. I'm not going to pretend that I would have I didn't realize this was going to be a bottom tick. Everybody in here knows I don't bottom tick I don't hold bottom ticks to their full potential. So my complete honesty, is going to be, I'm likely out here. Now, what do? I've exited the trade. We've rejected my level. Well, I'm still in buy mode. In my mind, all the EMAs are pointed up, VWAP's pointed up, hourly 20 is taking nice big stair steps up. And, I might have been stopped out here. I likely was, I'll repeat that over and over again. Now I want to close above this level. So that's what I'm going to watch for. And we get the close above the level, but it's similar to this one back here. My entry is ideally as close to 559.30 as I can be. We only have so many levels here, so you have to use them. I don't want to be entering up here 30, 40 cents higher. I want to wait for the pullback. So you don't get the pullback, you don't get the pullback, and then you get the perfect pullback to exactly where you want. That's one of our levels. So I probably wouldn't have caught this trade. I would have hoped I caught this trade. Flips trades like this a lot. You have an order. This is where you want to enter. Put your order there. Then you get picked up on the wick. But hindsight's 2020. We can pretend we'd hit that one, but at the time you were staring down a big red candle, and it would have been scary to buy it. So you have to just ignore that. Well, we still want to be in the trade. We've missed our dip down to here. So what do? Wait for consolidation into the EMA. If we can get the consolidation over here close to that EMA, then that offers us a good entry. So when this candle opens, we get the little pullback down to here. That is our entry on this trade. Again, this is one that I likely would have taken because I would have missed this one. Then I would have had my eyes watching this. We have plenty of buyer volume. Buyers just smoking them, even on what was a big red candle, ended up, 75% buyers, something like that. So bulls winning, EMAs all pointed up, holding above levels, buy the pullback to the 9 EMA. Then you catch the nice breakout. This is one that, again, I don't love it because according to price action, we're at 560. So if I catch this one and then one candle later, I'm $1 higher, I'm out. No questions asked. I'm just taking the trade off here because when I am building my plan, I'm watching the market move, I'm buying at the 9 EMA. 9 EMA tests, first one on the day, pretty good, but still treat it as a scalp. This is the type of thing you want a small position in. You didn't get the entry you wanted. If you enter down here, your stop is just below there. Very tight stop. You enter here, your stop has now instantly been widened 30 cents. And anybody who bought calls here, out of money, they're losing money now. And so you want to buy the pullback to this EMA right here. The risk of that is you've now increased your stop out by 30 cents, which for anybody who scalps SPY or trades SPY, you know that is risky on same days. Obviously, you're trading a couple of days out, no big deal. This is all talking scalping same days. So, or tomorrow's, whatever it is. You get this pullback, you buy it. As I said, I get a buck pop. You guys know how I trade. I'm out. So now the next trade that I look for personally, I don't have any interest until either our next level up here or the 9 EMA. What the market decides to do is pull them together. So I start to look at the market like this. And I look at this personally, and I don't know what happens. So we'll see if this one's a stop at, I start to look at this and I say, well, that's a triple top. And for the first time all day, we have seller volume showing up right here. So I'm not buying calls personally on the dips here down to this 9 EMA because we're kind of wedged. I want to see some confirmation above here. You know, is there 20, 30, 40 cents to scalp, which I do like to do? Sure. But for a nice, safe trade that you can take an actual position in, then you want confirmation. You don't want to see seller volume increasing. You don't want to see, or you want to see consolidation, but you want to see bullish consolidation, not like the first sellers of the whole day consolidation. So that's volume kind of giving us a hint. So for me, once we push up here again, push up here again, I'm short, you know, for a scalp. And my stop is just above me, you know, I'll remove this guy so we can see a little bit better. Whether it's just a close above this 561.77, close above 562, maybe I'm trading longer dated stuff so I can widen it out to 562.36 or whatever this is. But for me, I'm short right here and not looking for much. First trim's going to be these lows, you know, maybe 70 cents below you, nice little scalp on SPY. But I'm short right here on the triple top every time. Wow, works for us this time. So again, because of how I trade, I knife to the 20 EMA, I'm out. You know, for me, I'm out of this trade here. That's how I trade. You get a $1 drop in one candle, you're up nice on a couple of SPY contracts. So for me, I'm out of the trade. Can you hold it? Of course, but big strong day, you're risking shorting the momentum even with the increased seller volume. So I'm out here, obviously ends up paying quite a bit more. And then at this point, I look left on the chart and say, what do I think? Well, we bounced a consolidation point, but we have a triple top up here. So in this zone right here is a range as far as I'm concerned. Obviously we have, you know, the opening range is set as well, which we're going to do on the next day. Obviously opening range is set as well, but we have now developed a nice range somewhere right around here. So we treat it as such. Any dips down to here, we buy them. Any bounces up to here, we short them. In this middle, you can look to take scalps on breaks of EMAs and stuff, but I don't. When we're sideways, you know, like this, which we technically are for a couple hours at this point, this is sideways. I want to be long down here and I want to be short up here. Maybe this will be a stop out. So as we continue to push up, I got to drag my box a little further. As we continue to push up, back up to our 561.77. This one is, again, you know, we're just using everything we've learned in my classes. We know that 80% of breakouts fail. We're on attempt number 4. We got attempt 1, attempt 2, attempt 3, attempt 4. So if I'm taking this short, which I am, it has a very tight stop. It has a hard stop, about 562. I'm risking 20 cents against me. I'm not risking much on a trade like this, but I'm getting short here because we're at the top of the range. So you short the top of the range and we get blown out. So you get stopped out right here. This next candle up, in the end, you shorted it, you risk 20 cents right here, stop out on the day. That's just part of it. You know, we've hit 4 really nice trades. Here's our stop out. Now you don't panic. You don't ignore your rules. You don't say, oh, I want to see what happens. Oh, somebody on TradeForce said end of day dump, you know, you stop out for very little risk. You probably lose about $8 on a trade like this. But like I said, I'm short here. I'm no longer short here. One candle later. Now I watch our little zone we have right here. And how does it perform? I know that above levels, EMA's pointed up, VWAP's pointed up, well outside of the hourly range or the opening range. I didn't draw the opening range on this day because it rallied hard, you know. But opening range, and then we break out. So now if we're above levels, again, just reading price action, what do? We look for a close above it. We buy the pullback. This one gives us a nice little pullback, obviously. So we get the pullback here. That's all we care about. Catch the pullback, nice little push up, some sideways, nice push up, bump the stop to right there. One more nice push up. I'm likely bumping the stop to here, and I'm getting stopped out on this pullback off of our 563, you know, previous all-time high level. So that's my trade. I get one more scalp here, more than covers the stop out down here on our failed short, but you take those steps. That's just, that's one of the most important things in the market. If you don't know how to stop out, you just won't last long. You guys know I beat the drum every day about if your trades are going 30, 40, 50% and they come back to profit, I'm happy you made money and that was a horrible trade. Don't do it again. Look for the re-entry. And so that's what I do. Now that I've taken my trade, I'm stopped out here. Well, we're going into the end of the day. I'm just going to watch for consolidation. And that's basically what we get is consolidation here. Only other thing, and really as I look at the rest of this day, I don't like this for a short entry with the big buying on it. I don't like this for a short entry personally. Yeah, I guess you could make an argument that this one is okay for breaking back into that range. As I look at that, I don't hate it, but this is too far away from entry for me and sitting on VWAP. This one is too far away from the entry I want and sitting on VWAP. And I don't short that kind of thing. We're in the center of the range. I want to be short at the tops, long at the bottoms. Then obviously we sell down and the day ends. No big deal. So that is how I would have traded this day. Then we do the exact same thing. We have our levels that we care about. We have our zones that we care about. And we just keep on going right. We watch what happens in pre-market and we watch, again, our levels. This one's going to be a tricky one. Kind of an ugly setup. We'll zoom in a little. So whole bunch of consolidation into the open. Obviously, not much movement. We got, a 40-cent range. Something that I do like to take note of in the pre-market is any sort of trends that we form. These aren't discussed a lot. I know I use them. I know Flips uses them, but not many people use the trends in the pre-market. But if you have a small little downtrend or small little uptrend forming, playing those little breaks can frequently benefit you pretty well. But the thing that we want to take note of here is this was our, on the previous day, we'll go back and look at it. We broke out and then failed below it. So we kind of know this zone is relatively important going into the next day, and we happen to be opening right at it. And so what I'm going to do personally, I got my little trend. We're above the EMAs and VWAPs. I'm going to be looking for a break above 562.36. Strong buying. Maybe if you get a pullback to 561.77, you can risk it. Tight stop there. But I'm going to be looking for a nice close above there. And so first candle doesn't do it. Second candle does it. Nice breakout here. However, we don't buy the tops of green candles. You don't want to buy this. You're already 50 cents away from where you want to enter. So you want to look for the pullback to come. And so this next candle gives you the pullback. And honestly, we sell right to this level. So for me, man, I got to be honest, again, I didn't trade these days. And if the day was going like this and pushed up and dumped like this, I'm probably not buying this because we're giving up those EMAs. We are holding the strong level, but I'm probably not buying this. And I'm, again, waiting for close over 62.36 because I don't like that candle. Nice doji. Okay, well, now when I start to see this doji, I start to think to myself, maybe they're going to hold it. Let's see what the next candle does. And again, I'm just trying to tell you how I would be watching the market. Oh, no. Oh, we zoomed out. So next candle, I think we're on the right day. Next candle, dojis. I want to see what the market does. I again want to see what the market does. I again want to see what the market does. We basically just have indecision there. So you see what the market does is all you can do. Still not buying. Finally, we get candle close above. We didn't buy any of this. Finally, we get candle close above. Too high for me to personally buy. I'm not buying 20 cents above where I want to enter, 15 cents above where I enter. This candle finally offering the entry. Pull back to your 562.36 level. Finally, we got a trade on it. Took us an hour into the day, but we finally put the trade on here with the pullback. But for me, here's my target, 562.80. So when I buy this pullback, I know that my stop is, 20 cents below me, 15 cents below me, really setting a new low. No, I see your question right there. No, I'm buying on the pullback right here. Because if I won't buy it at this high, this is where this candle closed. So I'm for sure not buying it up here. I buy it here. Um, Tim, were you the one asking me about the Dow? Seeing your name makes me think of it. These are prior day. I did all this right in the beginning. I charted all these from the daily and the 4 hour. These are all from the daily and the 4 hour, and we only use levels before these days came, from basically that big red and green day we had back to back. So I'm buying this pullback. However, I'm not looking for much. I'm looking for a scalp. So for how I trade, I know my stop is basically a close below here, below this 562.36 level, or I'm placing my sell order somewhere right around here for the majority of the position because it is the previous high. So that's where I'm going to place my sell order, 562.83-ish, we'll say. And I'm just going to let the market work. Doesn't get there, doesn't get there, doesn't get there, but never closes below our stop. At this point, I'm saying to myself, well, I was early. That's unfortunate, because I'm not, I might be making 10% in here, but I wanted the quick push up. And when you get a pullback and then you get a bounce and you get some pullback and you get a bounce, not good for same day contracts to be holding them. Finally, we get a little push up. And then on this candle, especially after 25 minutes and nothing, I'm out of my entire position. Mid candle, it looks like, because I'm gonna have my limit order waiting around these highs. And then somewhere up here is where somebody makes fun of me for like, you always sell right before it explodes. But that's how I trade. I'm looking for the scalp from level to previous high. I don't think this level is major enough to put on a chart, but I'm looking for level to previous high. So I get my scalp there, one trade on the day so far, and then I let the market breathe. And what I am looking for, we've now gone, a good distance into the day, 750. So what do I do around this time? I identify the lowest low right here and the highest high of the day so far. And that's what you see me post on my chart every day, or in my tab every day. This is the opening range. So we know that we're coming into the opening, technically we're at 750, so I'm a little bit early. I am watching us push up to this level that we have. I'm watching us push up to this level that we have. I'm watching us push towards the opening range. So now I'm watching the market and I want to see, are we going to continue to push up, or do I risk the short right here? So again, I let the next candle play out. When I see that next candle right there play out, and I'm trying to not see what goes forward. When I see that next candle play out, granted the opening range is now getting bumped up, a little bit, somewhere up there. Opening range is now getting bumped up a little bit. Oh, nice. I see how this trade's going to go. Opening range getting bumped up a little bit. I'm seeing a nice rejection. I'm short right here. I'm short on the close of this candle. And why am I short on the close of this candle? Because the opening range will be, technically speaking, set at the end of it. I know that first breakouts, statistically speaking, fail. 80% of breakouts fail. I know that we're pushing towards the opening range. I know I have a strong level right here. So I short it. That's what I do. I know that because this is where the end, opening range is a little bit higher. I know that when I'm shorting this level, any breakout close, I'm stopping out. Any big volumed back explosion, I'll typically wait for a candle close, looking for something like this candle. Any big volume backed explosion outside of that thing, I do first hour and a half, Omar. That's what I like. Higher probability of the higher low of day being set, 90% chance or so of the high and low of day being set in the first hour and a half of the day. Whereas an hour, you got like a 70% chance, give or take. Still really great odds, But so I'm short here. Again, stops above it, great. And any volumed back buying above it, we stop out. So as we can see, and I'm going to have to try to zoom down, I'm stopped right here. I'm likely stopped as this candle pushes it up, I'm likely stopped somewhere up here because I'm really only going to let a counter trend trade like this. There's no denying when you look at this, you can always put a trend line on there. When you look at this, the trend is up. So you're fighting the trend right here. So this bounce up, I get stopped out of that trade. So we got one winner, one loser. Now I sit and I wait. And I let the market breathe. We broke above it. We broke above the opening range. This candle closed way too high for me to be wanting to enter that trade personally. So I'm not going to take it here when I'm sitting 60, 50 cents above where my potential long entry on the breakout side, where my potential long entry on the breakout side, is too far away. So I don't take it. So now what I am watching for is either a push all the way up to, you remember we have this trend from the daily to attempt to short it, or a pullback to some EMA's opening range to potentially look for a long to buy it. And so no trades for me here. I sit and I watch and I let the market play out, and it pushes up, and we'll see how this plays out for us. Pushes up, pulls us back to the opening range, closes, technically speaking, inside of it. So I don't just buy this one instantly. Why don't I just? Because I always get asked, sometimes, well, why did you buy that one, or why did you short that one? And very valid questions. Keep on asking them. I love them. But why didn't you buy this one? Well, my plan says all EMAs are up, VWAP's up, we're above hourly 20, we're above VWAP, we've broken out of the opening range. I buy dips back to the top of the opening range. So why don't I buy this one? Because of the price action on this candle. It ate up 25 minutes of work. It has basically no wick on the top, and it closed at its lows on, almost entirely seller volume. So you don't necessarily want to get long here, can end up being one of the trades that you're like, oh, dang it, apparently I should have got long there. But so now that the market has given me an opportunity to watch, I'm now watching for two things. I'm going to be watching for a bounce of this opening range, potentially over the EMA, to look for a long scalp, or holding within the opening range, breaking below this level. Even if you want a little additional safety, maybe breaking below the 20 EMA. But this is a trade where I will likely be taking a trade on the very next candle. And so this is, I wanted to use this tonight where I can say, typically when I'm posting something in my tab, if I don't make it an official alert, I am at the very least watching something. However, it might be something like this, where if I see big buyers showing up and pushing us, I'm getting long. If I see big buyers or sellers showing up and dumping us, I'm getting short. But I want to, I want to let the market tell me what to do. I don't want to say, hey, I think we bounce because this is the first try breaking back in, or I think we dump because this is the first try. I want to let the market tell me. So we'll see how the next candle goes. Well, next candle honestly gives us a pretty dang sweet entry. I don't exactly know how it played out, but obviously pushed up to the 9 EMA. We're unable to break above it. Longs off the table. We're watching short. We break below this level into the opening range. We're short. Right around here, stops above the 9 EMA. As we said, we're watching this hourly 20. We get a nice close below that hourly 20, but we've already seen a 50-cent drop on SPY. You trim a couple contracts right here. Stop is now top of the opening range. This is one quick candle paying you 15, 20%, maybe more on your contract. Quick little payday on it. And then you move your stop to the top of the opening range. Bump it forward, we're stopped out in profit on the very next candle. Now we sit and watch because, again, closed too far out of the opening range. We did close above the 9 EMA, but after this, we just want to see what the market does. So that's what I do. I sit and I wait, and we consolidate, and we just keep on consolidating, and we keep on consolidating. And we know we're following the same parameters. You can scalp breakouts or you can scalp breakdowns, but you always want to watch consolidation. So we can start to analyze the market. We're going sideways, but what is happening during this? EMAs starting to go down. EMAs starting to go down. VWAP and 50 EMA starting to flatten all through here. That tells us that momentum is slowing. We are starting to see more and more red in this, the volume down here, as opposed to more and more green. So we start to watch. Well, we knew we were targeting around this 20 SMA or EMA, so we can start to look for entries below there. I unfortunately went forward, so I can't, pretend that I didn't see this, but the entry would have been here. That break of the break of the 20 EMA, and your stop would have been a close outside of the opening range. Because it's cheating, I'm not even going to talk about that one. Obviously, would have been a much better trading time, would have been a much better trade there. But then we sell into the middle of the range. No trades for me here whatsoever. I have no interest in trading the middle of the range. Really, the only thing that I care about, that's probably got a little messed up, is somewhere down here. And I should probably try to zoom out so I can see where the actual low is. Somewhere down here is going to be, I'll bump it up instead, the opening range. So that is going to be the next thing that I look for. And it's going to be, not a lot happened here. This is my next entry. And why is this my next entry? Obviously, we saw forward. We know we're getting a little bounce here. We're cheating a little bit. But this is one that I 100% would have taken. I'm sure Raphael would have taken it. Sushi Joe would have taken it. All the opening range traders. You got the hourly 20 sitting right here at the opening range. That is excellent confirmation to try calls. You can see you buy the dip down to here. This is a mid candle purchase. Stops are going to be below here. You buy the dip down to here, and you basically instantly catch like what, $1 pop on SPY. Your first trim is this level. Second trim is this level. That's it. That's all you're looking for on a trade like that. 1, 2, 3 candles. That's really all you need for that type of volatility. Now I watch again because this is a double bottom. So we want to see, is the double bottom going to hold, or is the double bottom going to break? When we're staying like this, again, looking at EMAs, looking at levels, we're under levels. We're barely holding levels. We got sellers showing up down here, a couple nice buy things, instantly followed by big selling. This is one I might have taken and then instantly was stopped out. On the next one, you see solid seller volume on something like this. You really want to be careful buying it, and you want to have your hard stop just like 15 cents below you. Now, broken out of the opening range. So I watch. This is way too far away from, a close down here, same as we were trying to do up here. You want to be shorting up here and you want to be buying down here. And if you break outside, you want to be shorting here. So you're tight, you have the tightest stop possible. So we look for volume and any sort of bounces up to short it. And now we've got one right here. This candle bounce up to the opening range, bounce up to the hourly 20, bounce up to the 9 EMA. We can look at this. We can say trend is strong down. Obviously, I mean, this is likely not the exact trend that I would have had, but I would have trend like this. Trend is strong down. EMAs above it, all EMAs above us, VWAP above us, hourly 20 above us, opening range 9 EMA. This is a short right here. You instantly make money. So you can even take a trim on that first candle because you don't want to risk the market bouncing on you. It's been consolidating for 20 minutes now. That's, basically 4 failed breakouts if you want to think of it that way. So you short it here, you scalp out of your money and this late in the day, you just did like 50% on one SPY contract right there. And then keep on holding, probably bump your stops into profit, at this 9 EMA, at this opening range on that candle, because you just don't know what's going to happen. You're still in there. You're still in there. You might be getting stopped out because of theta by this point, but you're still in there. Your stop is here. That's all you care about. You entered up here. You're protecting your few bucks. You can obviously be scalping for some extra profit here. Finally get a nice push down. Definitely take a trim off there. Now you're just in a couple of runners, still in it, and stopped out. And next trade on this day, we know always following the same rules. That's what I'm trying to beat into here. Beat into it here is we are always following the same rules. We're always looking at supports, resistance, EMAs, opening range, and any sort of trend that we have forming. So what do we see right here? We see breaking back into the opening range, breaking trend, breaking above EMAs, EMAs kinking up. We have a whole bunch of consolidation followed by bullish breakout, strong buying candles. We are a dip buyer right here. Any pullback to that opening range, we closed inside of it. We're a dip buyer right here. Stops below us. We know this one's not going to get too ugly. And if it does, hard stops down here, 40 cents, 30 cents below you. But we are a dip buyer right here in that trade. Oh yeah, next one basically instantly just pays you big. You're going into the end of the day, catch a buck move. But I am still, for me, I'm gonna take most of them off on that move. Personally, I'm gonna take most of them off on that move, and I'm holding. My stops are above entry. My stops are probably a push below the hourly 20. I'm still holding. Oh yeah, a lot of consolidation. At this point, if you aren't stopped out by theta, it's a miracle. And then there's your stop out. Still in profit, no big deal. And then obviously that's the end of the day. We don't need to talk about that. And so that's how I would have traded those 2 days. We have 3 minutes left. So I think we will unfortunately have to pick this up going into price action reading tomorrow. But again, these levels made it easy on this day, I'll tell you what. And this is just one of those classic range days for us. Was this yesterday? I don't even know what day this was. I think this was probably yesterday. I feel like I traded this day. You know, short and tops, buy and lows. Short and tops, buy lows. Short tops, buy lows. Oh yeah, this was the day because everybody kept saying this was the head and shoulders, but I hate to tell you, everybody, it was nothing more than consolidation for a breakout. Okay, well, sorry that ran a little longer than expected. Thank you all for being here. I saw like 65 of you. That's awesome turnout. If there's any questions, feel free to shoot them. We got a few more minutes. If you want, we can of course talk about this day. Nice like range day with attempted breakouts we had yesterday. Otherwise, tomorrow we will get into price action reading again. We'll probably finish up on this and then talk about how to trade some of the things that you all are looking at. What could you have done on your trades? And that will be tomorrow. Yep, recording will be uploaded, next couple days. I'm not exactly sure when. I know Joe's busy, but whenever he gets around to it, he will get it posted for sure. Yeah, the multi-time frame should be pinned in my tab. Same as everything I use. Buy and sell volume up here. And this one's a little bit different, but I got a nice lower buy and sell volume pinned in there. I got, obviously EMAs, and then I got an opening range one. I got a pre-market high and low one, anything you could want there. Shanks, thank you. Viral, thank you. Oh, Gail. Um, uh, I can't show you. I'll DM you right after this and I'll show you where. Nope, no Toasty class tonight. I'm covering for him. He's on vacation. That's why I'm doing a couple of them this week. Yeah, thank you all so much. That was awesome turnout. I really appreciate you being here. And then tomorrow again, it's nice to see you in here again, bro. Yeah, he's trying to turn into Mario Needle. Again, tomorrow will be me. It will again be at 8 o'clock Eastern time. We're gonna be doing, similar to what we did today, but we will be discussing what we actually see in the candles, what the candles are telling us. We'll probably just pick up where we left off and run through it. So the hourly 20 on the same chart, I have a script for it. That's what these people are asking for. And so I have it pinned in my tab, and it's something that you can actually just set up that way. And there is another way to do it. I'm unfortunately forgetting right now. Maybe Noodle remembers, but it might be like a 180 or a 240, like there's the 9 EMA. It might be like the 180 or the 240 EMA is also it'll show you the same thing. I'll try to find the number and send it to you. But if you got Thinkorswim, just use this script. See, I think somebody actually talked about this to me just recently. So the 240, if you run, and goes for anybody else if you don't have Thinkorswim. So if you run, and we'll see how well this lines up, the 240 EMA, it's not quite there. It's now this orange line. It's not quite the same, but it's getting you in the ballpark. I wonder if the 220, because for anybody who doesn't know, that's just the period it's tracking. 220. I think I'd go 220 if I was going to try to use a 20. It's a custom script, so it's pinned in my tab. It's pinned as multi-time frame EMA, but you can see right here, this is the 220 EMA, and so it's showing you 225-minute candles. So that one looks, I mean, that works too. I just like the hourly 20. I like to see it as a line right there. I know it's ugly, but I love it. Yeah, thanks, Noodle. They're all pinned. Anything I use is pinned in my tab. Like you guys see my charts, they're super simple. I got VWAP, an hourly 20, and 3 EMAs. That's all I use. You don't need all that fancy stuff to trade with. Okay, well, if that is gonna do it. Yeah, you can for sure mute Toasty's channel. If that is gonna do it, this one up here, Johnny, is that what you're thinking? So this one up here is pinned in my tab as well. It's the one that's labeled Assassin Buy Sell Volume. And so I didn't do it in this class. A lot of the time, I run two of them. I don't know if you can, I don't remember if you can see this. So a lot of time I run two of them. And so you can actually change what it shows, the period. And so sometimes I'll run the 5 minute. And so it'll actually look like this up here. So we'll have, buy versus the buy volume and the sell volume on the day. And now we have the buy and sell volume on recent. Oh, well, apparently I didn't click the save button, but you have the buy and sell volume on the recent 5 minute candle. Obviously very little volume on it, but if you're in a trade, that can, that goes back to that stuff that I was talking about of watching what the buyers are doing. And if you're in calls, you want to see more buyers than sellers on the shorter and the longer time frame. So that's one of my favorite ways to use it. Right on. Okay, well, if that is going to do it, thank you so much, everybody. Final class of the series. You all were awesome. We had great attendance. Like I said, we'll be doing one more kind of just wrap up tomorrow. But thank you all for being here. It was just great. I really appreciate you taking the time out of your day, and we will call it here. That's what I'm saying, Omar. Let's get after him. Yeah, Noodle knows. Yeah, thank you, everybody. Have a great night, and we will talk to you tomorrow.